Hey guys, this is Claudia from QuickBooks Expert. So Expert Experts. Our website is www.quickbooks-experts.com. I am a QuickBooks Pro Advisor certified agent with over 20 years of experience as a bookkeeper. So today we're going to address a very common subject is invoice versus sales receipt. So when should I use an invoice and when should I use a sales receipt? A lot of my clients have issues, and one of the biggest issues is for those clients that use invoice and don't receive payment on the invoice, that they go to banking and they accept the transaction, and instead of matching to an existing transaction, which is the invoice you entered before, they just add that as an additional income. So therefore you're duplicating that income or duplicating expense as well if you're entering a bill. But how how to avoid that, and when should I use the invoice? When should I use sales receipt? The answer is it's up to you, but I'll give you the tips so that you can decide, make an informed decision. When you enter an invoice in QuickBooks, we're going to go right there right now. Okay. All right, so we're going to go over here. We're going to enter an invoice. And let's see, I provided some services to Joe Store. And um, those were just sales, right? And it cost $1,000. All right, so save and close. Created on the 15th. And Joe came up to me and said, okay, here's the payment. I send the invoice to the customer, right? And he sent the payment. Now what? Um, if I go, my bank is not, this is just a trial account, so I don't have any bank set up here. If this was a valid account, we would connect the account, and all the transactions in banking would be flowing through QuickBooks, right? So you will find that transaction because it came through your banking. So you'll find those transactions in your banking transactions. So a lot of times people would just see the transactions and just click on add. They would not apply. They would not apply to the invoice that you entered before, and that's a mistake. That's what I was telling you before. That creates duplicate income for that service. So how to avoid that? There's a workflow in QuickBooks. When you enter an invoice, once you receive the payment for the customer, you gotta go to that invoice, see that? $1,000 and receive payment. So $1,000. So today, my customer was very prompt in paying, and he decided to pay the whole amount. So sometimes they can pay half of that, $500, and then you have a balance remaining. If that's the case, I would change the payment to $500 and then save and close. And then when he makes the next payment, I'll select the next payment. So in this case, I would check whatever the account is going to my checking account. And then once I see that transaction in my banking, it's going to ask me to match that, and I'll go ahead and match it. That's what we want. With invoice, we always want to match. So we're going to put here that he did pay $1,000. Now we're going to save and close. And then the final step on this one would be go to banking, see the transaction, and match it to this transaction. So that's how you work with invoice. So you got to write the invoice, then you're going to receive payment and match in transactions. What about sales receipt? Sales receipt will eliminate the need of enter a payment, because in sales receipt, you're basically telling the computer that, or the system, QuickBooks, that you already received that payment. So let's go ahead and see how this works. So we're going to go to a sales receipt. We're going to go to Joe's store, right? Let's suppose that, well, Joe sent me a payment or pay me for a service on September 15th. So I'm gonna go ahead, and it hit my account on September 15th. So I'll go ahead and put here Joe Star September 15th. And this was sales, and it cost $500. Okay, so this way we're not going to be confused with the other transactions. So save and close. And this is it for the sales receipt. I don't have to receive payment because the sales receipt is already telling me, or I'm already telling the system that this payment has been received and I deposited my bank. So now the next step is just to go to banking and then go ahead and match that transaction to the sales receipt. So very simple, and it eliminates the need of receiving the payment before you match in the banking transaction. So that way you can avoid lots of issues with duplicate income in QuickBooks Online. So you don't want duplicate income because you don't want additional tax liability. So with that being said, you can make your decision right now on what would work best for you. If sales receipt or invoice. Now, just wanted to let you know about customers that may have a big project, may have a big invoice, and they're going to make partial payments. So in that situation, I would definitely recommend you to do the invoice. And the reason why is because you can kind of track the payments towards that invoice. Now, if you do projects, you can actually manage all your income and expenses on a project with QuickBooks Online if you have QuickBooks Plus or Advanced. And that is very useful for companies that does large projects. So, you know, I don't know if you have a 500,000 project and you want to track all the income and expenses related to that specific project. But we're going to stick with invoicing and sales receipts. So I wanted to give you a few tips in how to avoid those duplicate income transaction and how to decide what is best for your company if you should, or I should say, what's best for a specific transaction. Should you enter as an invoice or a sales receipt? It's up to you, whatever works best for you. But hope this was useful to you. And if you like this video, make sure you click on the like button down below. And if you'd like to subscribe to our channel, go ahead and click on subscribe. We'll be recording these videos pretty much weekly or bi-weekly with tips and information on how to manage your QuickBooks Online. And we would love to see you again. And until next time, I will see you later.